The Fed raised rates another 0.25%, but the interest rates on the loans that I am getting just went down by 0.5%. A common misconception is that whatever the Fed sets interest rates at, it has a direct correlation to what your interest rates are if you're going to borrow money from a bank or from a lender. The reality is that's just not true. And I'm not just talking about the fact that private lenders can lend out money at whatever rate they want. I'm talking about big institutions and banks that lend money. See, what matters just as much, if not more, than what the Fed is doing with the actual rate hikes or rate decreases is the language around it. And so on this most recent one, they slowed down the rate at which they were increasing interest. They only went up 0.25. They started really aggressively this year and they've slowly gone down and down. And the last couple of rate hikes were only 0.25%. So how banks and institutions set their rate, it's based on a couple of factors. It's based on once they create the note, are they keeping it in-house? Or once they create the note, are they selling it to a third-party note buyer, a hedge fund, some fund that just buys paper? Ultimately, if they're selling their notes, the buyer of those notes is going to set what the interest rate is going to be because they have a predetermined return on investment that they need with their money. And if a lender is keeping all of their notes in-house, they're not selling their notes, they set the interest rates based on what they're comfortable with, what their thesis of the near future and long-term future is, and how aggressive they want to be in this market. So perfect example is two different banks. And one of these banks I've done business with a long time. They keep all of their loans in-house. They are lending below the prime rate right now, which before about a year ago, I would have thought that was impossible. I thought banks took the prime rate and they tacked on about a percentage and they just, wherever the prime rate went, they loaned at a little bit more expensive interest than the prime rate. Well, this lender that's been around a long time, they are lending out below prime. On another bank, they are lending out at 1.5 points above prime. So seeing how the Fed raised rates and one bank lowered their interest rate and the other bank drastically increased their interest rate, you see that there is no direct control of the Fed on interest rates. Now, is there a correlation? Yes, but it really comes down to who is providing the money. And so Bank A over here, their thesis on the economy was things are going to get better, interest rates are going to go down over time. So now is an opportunity for us to capture more market share and do more loans than ever before. And since they weren't selling their loans, they were really comfortable doing those loans. Bank B over here, they said, we don't know about the economy. We think interest rates are just going to keep going up indefinitely. And we don't want to be holding these loans a year or 2 years from now, knowing that we loaned out at a low interest rate whenever rates are so much higher at that time and we're missing out on potential interest. And so as you can see, the difference between Bank A and Bank B is just how they feel about the economy and the lending environment. That's what determines their interest rates. I'll be honest, I did not know a lot of this until about a year ago, but knowing this information and then seeing how rapidly the Fed rate has gone up over the last year, it's been really interesting to kind of see what the general population thinks is going on behind the curtain. So today in 2023, we're in an age where that's just the way it's always been is no longer really good enough. So learning things like how interest rates are set can be huge in your business. If I were to just settle for that's the way it's always been, I would be borrowing at 3% more interest than I currently am right now. So a hunger for knowledge and questioning the status quo can save you and make you a lot of money.